Now to a tale of two very different economies. In the United States, runaway debt and a fierce anti-government backlash have pushed the country to the brink of being unable to service its own debts. The economy's in the doldrums and America's even at risk of losing its AAA credit rating. Here in Australia, by contrast, the economy's booming thanks to the resources sector, and the biggest worry for policymakers is inflation. Both countries today made important decisions to deal with their contrasting economic issues, but the long-term challenges remain, as Greg Hoy reports.
Ayes are 269, the nays are 161. The bill is passed.
Big deal. D-Day in the US House of Representatives may have averted a debt default, but by delivering just half of the $4 trillion in budget cuts requested by ratings agencies to maintain America's AAA rating, the result was hardly a rousing relief.
This was a mess. There is no question. It was a circus at times. We unnecessarily sent the message around the country and the globe that the United States might, in fact, default on its obligations for the first time in its history.
Closely watching these developments, Australian and international currency traders, the implications profound for the US and Australian dollars.
I think there's more downside for the US dollar. One, because these fiscal austerity measures are going to ensure a slower period of US GDP growth over coming years. The downside to the US dollar will give the Australian dollar a lot of support, and also because this period of slower growth is in the US economy and to a lesser extent in Europe, it's not really in Asia, which is driving global growth and where 75% of Australia's direct trading partners are.
So the rise and rise of the little Aussie dollar, it seems, is set to continue. A bad omen for local manufacturers, including the car industry, which employs around 50,000 Australians, whose job security has been undermined by the dollar's relentless ascent.
There's a double whammy effect from a high dollar. On the one hand, it means that imported vehicles are more affordable for Australian consumers, and on the other hand, it makes it harder for the local manufacturers to win export markets for their product. The level of imports as a proportion of the Australian market is around 80 to 85%, and the share for domestic manufacturers has fallen down to a level of about 15 to 20%.
And it's not just manufacturing activity falling. The glamour of Australian retailing has also lost its lustre. Both Myer and David Jones recently issuing profit downgrades. David Jones suggesting an unprecedented, dramatic and rapid deterioration in trading conditions and consumer confidence had forced it to slash its forecasts. And it's not just big department stores. Peter Strong runs a Canberra bookshop and heads Australia's Council of Small Business.
What I'm hearing from a lot of retailers is this is the worst they've ever seen. People are comparing it to the recession of the late 80s, the Keating recession. Some people are saying this is worse, but we're going back a long way to find something that's like this. And there's a lot of pessimism out there. A lot of the surveys that are coming out of ACCI and coming out of the banks and coming out of Telstra, etc., are all showing that there's pessimism in the sector, and small business by their nature are optimistic people, so when they as a group start talking about a pessimistic view of the future, we really need to stop and have a look at it.
And the Australian housing sector is also feeling the heat, or rather a big chill.
We've just got the figures for new home sales, and they were down 8.7% in June. Now, that was the lowest decrease since September last year, and the lowest monthly decline in 5 years. So that's got to be concerning.
So all eyes switch to the Reserve Bank of Australia's delicate decision on whether to raise interest rates to head off rising inflation boosted by the resources boom and cost of living increases, or to heed the call of many other sectors of the economy crying out for help, which the RBA appeared to do by keeping rates on hold for now.
I think it's the best decision for the majority of Australians.
Chairman of Yellow Brick Road, Mark Bouris, recently launched a public appeal to send a message to the RBA board.
7 rate rises, in our view, straight after the GFC was too many. Small businesses are doing it tough. First homeowners who took the first homeowners grant back during the stimulus period, they're feeling it, doing it tough. More recent borrowers who borrowed, in 2009, they're doing it tough.
The Australian Industry Group said the RBA's decision was a no-brainer. But in his statement, Reserve Governor Glenn Stevens said his board does remain concerned about inflation, though noting the high dollar, softer house prices, global uncertainties and weaker than expected household demand. He said it was prudent to keep rates on hold. No stern warning this time that this was a temporary respite, which some, but not all, interpret as a sign the Reserve is softening its hard line on rates.
Is simply turning up the interest rates to control inflation actually in the best interests of the economic prosperity and welfare of the Australian people?
We're still going to be living in an environment of rate uncertainty, and I think that consumers are really looking for some stability in rates before that confidence is going to come back.
Here in Australia, the inflation is running uncomfortably above the RBA's 2 to 3% target zone, and that's why we're in the camp that we think the next move in interest rates is going to be up. Interest rates in Australia are likely to remain at pretty high levels or above average levels for an extended period of time, while US interest rates are likely to remain at very low levels, extraordinary low levels for an extended period of time.
That would mean the Aussie dollar stays high for the foreseeable future, at least delaying further interest rate rises in the near term. But economic forecasts can be trickier than weather forecasting, especially in such turbulent times.
I'm always an optimist about the Australian economy. It's extraordinarily resilient. It has proved it time and time again, right through all the disasters that the rest of the world suffered over many years. I have a very strong sentiment towards the RBA right now keeping interest rates where they are. So I don't expect to see a change for a while.
Greg Hoy reporting.